Welcome back. Staying with earnings action, MindTree came out with a pretty decent set of numbers for the fourth quarter, and the stock has been cheering the same. In fact, MindTree's been up 10% right from the morning, holding on to a lot of that upside momentum even as we speak. Let's quickly head across to Nigel to understand the fine print and what went behind the fourth quarter performance. Nigel?
Well, that's right. MindTree's numbers look quite good. There was a beat on the top line itself, a beat of close to around 2.5% or thereabouts. But the big beat came in terms of margins. Now, on a sequential basis, the margins improved by roughly around 60 to around 70 basis points odd, but that was including a couple of adjustments. They paid close to around 20 crore rupees odd to the Prime Minister's fund, and also there was a forex loss close to around 25 crores odd. Adjusted for both those two, the margins came in excess of around 14%, and that was where the big beat was. It wasn't just the past quarter where the numbers looked good. Also, the deal wins in the past quarter was nearly around $393 million. That was much higher on a sequential basis as well as on a year-on-year basis. On the back of this good beat, higher margins being guided for as well in the management commentary, Motilal Oswal went ahead. They have upped the EPS estimates by around 15%, and they've also increased the target price to around 960 rupees per share.
All right, Nigel, thank you very much for that. Well, we also caught up with Debashish Chatterjee, the CEO of the company. Listen into some of the commentary.
Clients are getting used to the new normal. The digital spend will probably increase within the entire client base. But within that, I think the high-tech media, they will probably take the lead in terms of the spend. So I think that's where we feel the growth will be more in the near future. For a full year perspective, if you look at margin, you will definitely see that the margin for the full year, I mean, if you look at the margin for the first half, we had a lot of challenges in the first half of FY20.
Yeah.
The margin was 11+%, and the second half was around 16. The full year margin is around 14% EBITDA. But what I'm saying is that we wanted to get to a run rate, which is a comfortable range, which we have achieved. And we want to make sure that the processes that we have put in place, that remain. Now, there will be some ups and downs for situations like what we had in terms of COVID. But barring that, I think we are on track in terms of managing, maintaining a healthy margin.
Okay, well, on that note, let's take a quick break. As we do that,